So you think about the last 10 years and think about all the national disasters that are happening in this world, right? We've got hurricanes, floods, fires, earthquakes. Credit unions have always been there to determine how am I going to come in and step up and how am I going to make the member's life better, right? So you're understanding, you already have a framework of what to do. You already know you need to segment those who are going to be most impacted. Of those most impacted, what can you do? And really, what's so neat about credit unions specifically is that they've got a couple really cool tools right off the bat. And the number one is that gorgeous skip-a-pay. And skip-a payments are an interesting little nugget. There's something that's credit unions have, they've got tons of, they've been using it, and specifically around the auto loan and around the credit card. But what I think is fascinating about skip-a-pay, and let's just talk some nerderific economics, if I may, that is that you've got, if you think of the ability of not having to make a payment for a month, if you think about that as a, as a being like a microloan, right? Like, let's just say your auto loan is $250 or $300. If that were like a micro auto loan, okay, now we think about microfinance. What does the benefit of having deferred payments help an organization? Well, there's actually a lot of work around that. There's a Harvard professor, Rahindi Pandey, and a Duke University professor, Erica Field, who are working on microfinance. And they figured out that if you can allow borrowers a grace period of 2 months, it will double the rate of their new businesses.